As I've looked over my trading losses, there are two main reasons why I've lost. The first one is that I was trading way too early at the market open. The second reason why I lost was because I was chasing stocks. While the first reason is bad practice is because at the market open, the stocks are way too volatile and it's very hard to manage your risk when the stock is moving against your direction so drastically, so rapidly. In just a short period of time, you can find yourself down way more than you expected and way more than you wanted to. And so that's why I've decided to not trade the first 15 minutes of the market open. And as I've mentioned, the second biggest reason why I've lost was because I was chasing stocks. Instead of waiting for a pullback or a retracement, I was entering a stock that already took place. And usually when the move has already taken place, it's overextended. Once it's overextended, another pullback or retracement is likely. And so when that takes place, I emotionally get shaken out because right when I enter, the stock is moving against me and I end up taking the loss. After reviewing all my losses, fixing these two errors in particular has allowed me to find trading success. The first one is easy. All you need to do is not trade the first 15 minutes of the market open, and it just requires patience and discipline, right? Just don't touch the mouse. In this video, I want to show you real life examples of how you can make money day trading every single day by entering pullbacks and retracements. I personally made $1,200 today entering a pullback, and so the proof is in the pudding. You see, the reason why this works is because of the nature of how stocks move. I want you to think of trading like surfing. You need to accustom yourself to the waves of the ocean and surf alongside the direction of the waves, right? It's impossible to try surfing against the wave. In the same way, stocks flow to their own rhythm. They tend to move with stair-stepping patterns with pauses in the middle. Your simple job is to enter on those pauses and pullbacks. Don't try to fight Mother Nature, you will always lose. Instead, by teaming up with the nature of how stocks move, you can find yourself consistently profitable with trading. After I show you this in detail and show how you can implement this in your trading, I'll end the video by going over my trading principles. Now let's get some benjis. So as you can see by the title of the video, the name of the game is entering on pullbacks. Another word for pullbacks are retracements, pauses. It's just when the stock moves in a certain direction, you want to wait for it to retrace, usually on lower volume, and then make, the subsequent move in the original direction that it was heading, right? And so I want to show you guys the trade I took today, how I made about $1,200 from it. And yeah, I think it's better for me to show you guys real life examples from someone that's actually doing it in real life, in real time, instead of just talking about it in theory, right? Because anybody could talk about anything in theory, in hindsight, after the fact, that you could have done this or this. But here I am on this channel, I try to explain to you the concept, the strategy, along with my trading principles. And on an everyday basis, it's just a process of trying to execute that plan and that process perfectly and flawlessly, right? We'll start off with the trade I took today with SMCI. So this one is a stock that I could have made a little more money on, but essentially what made me money on this trade was just entering a pullback. It's pretty, self-explanatory. It's pretty self-evident. And so if you look at the 5-minute chart right here, gives us a huge bearish candle. And as I've mentioned in the introduction of the video, you don't want to trade the first 15 minutes of the market open. It's just too volatile. You never know what's going to happen. But yeah, the first 15 minutes, it sells off hugely, right? And so didn't want to take a trade to the downside just yet. Wanted to wait for a pullback. And so the reason I'm saying I could have made a little more money is because I could have entered on this pullback right here, and that would have been about 10 minutes, about 10 to 14 or 10 to 16 minutes into the market open. And so it is a bit early for my liking, but it doesn't necessarily break the trading principle that I should wait 15 minutes, because literally on the 16th to 18th minute, that's when it flushes down more after this pullback. So I could have gone in at this pullback right here, and let the trade play out for me. But I decided to wait another 15 minutes or so and enter on this bear flag pullback right here, right? And so after, the stock moves a considerable amount, I'm waiting for a pullback. It makes this bear flag. It's like a bear triangle, a descending triangle, whatever you like to call it. I enter shorts and I take my profits at the end of here. And yeah, I cash that move. And so you can see that, it kind of reversed after this move, which, I guess plays, luck may play a small part, but overall, I'm aligning the probabilities in my favor as the micro trend was downward. And so, yeah, I mean, at this point, even at my entry, it is a bit, overextended, which is why I just took my scalp and didn't leave a runner. But if I did leave a runner, I'll probably exit when it's approaching my break-even price or my entry price. And so, yeah, could have gone in at 2 different locations, at 2 different areas on this downside move right here. So on this first pullback and the second pullback right here. Then, it gives us this nice little trend line break over here where you could have gone in for some longs to the other side. So that's what SMCI. If we take a look at Nvidia, it's kind of chopping for the first 20-30 minutes or so, but you can see that it's failing to go over this level at 854, right? So once it gives us this huge move down, it pulls back to this EMA, and then once it rejects this EMA, you could have gone short right here at around 842. Set a tight stop loss, and then look for the move downward, right? And so it's not really an optimal trade for me. It's not A+, it's more like a B+ trade because of this choppiness, But with the market selling off and, with the bearish sentiment and, bearish downtrend, in the micro, you could have gone in after this pullback right here. And then it gives us another pullback right here around 838 on a 2-minute chart. After this bearish wick, you can take it short and, take your excess down here. And then at that point, it's pretty much made a double bottom and reverse back to the upside, right? And so, yeah, in certain markets, you just have to, take your profits, after the first move down or up in whatever direction that it goes in your favor so that you can lock in some profits. So that's what Nvidia. If we take a look at Tesla just goes straight down for the first hour or so. And so, like I said, I like to enter pullbacks. And so when you look at the 2-minute or the 5-minute, it doesn't really give us any green candles whatsoever. It just slides right down along with the market. And so maybe around here at 180, 180.5, you could get in for some shorts. But overall, it doesn't give us, an optimal pullback. And so I just don't really like chasing extended stocks that, make a big move down with no pullback, right? But yeah, it's, you could have taken the trade right here. You could have taken a pullback entry right here at 178, gone out at 176.5 or so. But yeah, for the first 15 minutes, you should wait and assess the market and see, what it does. Because let's say you saw these two candles right here on the 2-minute chart and you think, the stock is going up after reclaiming the support level. The next 2 minutes, you would have quickly found out that it reversed on you and it's actually, on the 5-minute chart wanted to reject this level. And so it's better to, stay patient, not make any moves so hastily, but, remain patient, identify the micro trend in the short term and play with the trend, right? You always want to go with the trend. I'm always very hesitant if the whole market is going up, but the stock, is going down, or the stock has been going down for the past few days, I'm very hesitant on, trying to play the reversal on the first day. It's better to try to go with the trend that's been happening. And if it chooses to reverse, let it reverse without you. And, once it does reverse, you should play with that trend. And so I don't want to make this video too long, too, complicated. It's a pretty simple concept, but, simple ain't easy. And the name of the game is entering on pullbacks, retracements. If you guys haven't seen my other video, I like to call it a go, pause, go pattern, where the stock goes in a certain direction, whether it's up or down, and then it pauses, right? It pauses and then makes a subsequent next move back in the original direction. Yeah, if you choose to abide by the concepts and principles that I teach on the channel, all you really need to do to test my theory is to look back on the charts and see, that it happens every day, right? Every day after, the market session closes, I review my trades, and it happens every single day because it's just the nature of how a stock moves, right? Stocks don't move just straight up and straight down, going vertically, right? There has to be some pullbacks in between. And so, yeah, let's move on to the next segment where I discuss my trading principles. So the first trading principle is no trading the market open. Wait at least 15 minutes. Like I've already mentioned, it's very volatile, very hard to manage your risk when the stock is moving so violently against your favor. And so don't trade the market open. The next one is don't seek action for its own sake. Success comes from extreme patience and decisiveness. This is kind of related to the first one where you're trading at the market open. The reason why you're trading at the market open is because you're itching to take a trade, right? You see a stock going in a certain direction and you want to, play that so you can make money. But, the name of the game is following the strategy and the game plan. And so don't take a trade just to take a trade. Have the patience to wait for the opportunity. And when that opportunity presents itself, act swiftly and decisively. The next one is keep overhead low. Set your risk limit or stop loss when entering a trade and exit when hit to minimize losses. Pretty self-explanatory. Before entering a trade, you always want to identify where you're going to lose, where your thesis is wrong, so that you can minimize your expenses, right? The next one is mark important key levels. Take note of the current macro and micro trends and analyze the stock's price action, especially at its key levels. Next one is look for clean, strong trend lines with multiple touch points, bull or bear flags, and pullback entries and trends. Avoid choppiness. The wider or longer the base, the greater the upside potential. So let's break this down, right? What makes a strong trend line is with multiple touch points and a longer time frame, right? So a 4-hour trend line will be stronger than a 1-hour trend line, and a 1-hour trend line will be stronger than a 5-minute trend line, right? And the more touch points it has, the more validity the trend line has. And so you want to identify those, look for bull or bear flags because they come as patterns of pauses and retracements, right? These are just retracement patterns, continuation patterns, and pullbacks, right? What I've just mentioned in the video. And the wider or longer the base, which means, the longer the time frame in which a certain pattern or retracement is happening, the greater the upside potential, the greater the move will be. The next one is the score takes care of itself. Focus on perfecting the craft and executing flawlessly. So don't worry about the money. If you can, try to avoid looking at your P&L when in a trade and just focus on executing the trade properly, right? Take your profits when the move goes in your favor. And every day, day after day, month after month, year after year, if you just focus on the process and focus on your execution of your strategy, the money will come, right? The success will come. Let the score take care of itself. Second to last one is secure profits after the first leg. Ideally 50 to 75% of your size. This is just to, protect your gains, protect your profits, especially in a market where it's choppy. You want to scalp your profit when the move takes place. And essentially after the move takes place, there's nothing that the stock can do where you'll be, ending up red or losing money on the trade, because you've already locked in the profits, you've adjusted your trailing stop loss, and it's essentially a risk-free trade. Last but not least, set a trailing stop point after move runs in your favor to protect accumulated profits. Raise or lower your stop loss just below or over the latest set of candles. Let your runners ride the trend, ideally 25 to 50% of your size. Just to put it in simple terms, when the stock moves in your favor, you want to trail your stop loss, right? You want to adjust your trailing stop loss where, right? Right above or below the latest set of candles, depending on which direction you're trading towards, right? If you're trading long, if you're trading contracts long for the upside, then you want to adjust your stop loss just below the latest set of candles. If you're going short, anticipating a downward trend, then you want to put your stop loss over the latest set of candles and let your runners ride the trend. So this is the way you can maximize your gains after adjusting your stop loss, is to just let your winners ride. And so hopefully, you guys gain something from this video. If you guys appreciate the value, don't forget to like and subscribe, and I'll catch you in the next one.